Let's turn to small caps. The Russell 2000 actually outperforming the S&P 500 since the closing lows after Liberation Day, when we saw that shakeout in the market around tariff announcements. Although it hasn't been all smooth sailing for the small cap index since then, the Russell hitting record highs just this week. Joining us now is Stephen Denichilo. Stephen, it's great to have you on, and I think that's a pretty interesting stat right there. The fact that the Russell 2000 is up 41% in 6 months versus the S&P up 35%. What's driving it? Can it continue?
Sure. Look, it has been a long, dark, cold winter straight out of a Charles Dickens novel for small caps on a relative basis versus large caps. But what we're seeing is really since Liberation Day, you've seen this outperformance over the last 6 months. And small caps have underperformed the S&P 500 for the last 10 years. And so if you look at that long-term valuation, we have never been at a cheaper spot than today, small caps versus large caps. And what makes these stocks go up? It's very simple, Morgan. It's earnings growth. You have been in an earnings recession for small caps for a number of reasons. Since 2022, the earnings have been down. Now, what you have seen since May 2025, you saw one of the biggest cuts in forward estimates for small caps that we have ever seen before. That is setting up a very positive environment going forward. Expectations are low, and you're seeing those earnings pivot positive. When earnings go up, stocks go up. And when you take it to a point where we had the big, beautiful bill, now what we think is going to happen is a big, beautiful, broad market. You're seeing it in IPOs. September was one of the biggest IPO markets on record. You're seeing it in takeouts. In our own portfolio in the Federated Kaufman Small Cap Fund, we've had 9 takeouts this year. You take that all together, and it's a very, very exciting moment here for small caps.
Interesting. I mean, and certainly a lot of small caps more domestically focused. We talk about that quite a bit. How much, though, hinges, and I asked this on a day where we got Fed minutes that I would argue leaned maybe a little bit more hawkish than I think I was expecting or the markets were expecting. How much hinges on more rate cuts?
Look, we at Federated have a pretty bullish view in the overall market. We're seeing the market going to about 8,700 by 2027. And in that, we have a number of interest rate cuts by the Fed. And we think the Fed is going to cut not because they have to, but because they can. And it's going to be driven by lower inflation and lower wage growth. This is a low inflation Goldilocks growth environment that we see that is buttressed by technology that keeps costs down. And we think it's going to be a great environment for longer duration assets like small caps.
Okay. Very quickly, I got 30 seconds here. One name you like.
Sure. Let's talk about Centauri. The ticker is CTRI. A lot of discussion about AI and increases in electricity demand. Our electric grid in the U.S. was bad before anybody even plugged an iPhone into the wall. Now you take into all of these data centers that are being built in the U.S., and we're going to have electricity growth for the first time in 30 years. Centauri is a small cap way that's down because there's been a bunch of stock sales that were not great timed, but we think it's a fantastic point to be buying that stuff.